All right, welcome to the Melbourne high-level BDM market update. So just waiting for Reece to come on so we can find out what's happening in Melbourne. So we just finished the Perth market update, and we ended up just having a little bit of more of a conversation as opposed to looking at some slides with what was happening on the ground. And we were also just talking about some marketing ideas as well for BDMs in how to use the data. So I'll let Reece share what is happening on the ground with the Melbourne investors, and then maybe we'll just touch base with what we did before with some sort of marketing opportunities with how BDMs can use data.
Yeah, I actually think that I enjoyed that one, so I'm keen to probably do that again. In terms of the Melbourne market, probably not a hell of a lot's changed in the last month from a data perspective. So we're waiting to get the new population data come through from the Australian Bureau of Statistics, but I'd imagine that's going to be pretty favourable in terms of the Melbourne market. But if you're looking at what CoreLogic have released in the last day from last month, Melbourne from a macro perspective, flatline. So didn't have negative growth, didn't have any growth. It was similar to Sydney. We have seen auction clearance, auctions and stock on market increase, which actually starts to show you, well, it's a positive in some senses, but then it can also, I guess, from a price perspective, slow things down. So it's positive because people are starting to get confidence in the market to sell properties. I guess in terms of that probably could be reflective in what we've seen in the property prices when there's more stock available. You know, the price isn't competitive. That is it from a macro level, though. So I guess what I've probably said on these calls on Melbourne before is Melbourne is very much at the start of its cycle where it is patchy. So there's micro markets that are outperforming other suburbs. So I guess that where we could probably go with this one, Ash, is I was actually in Melbourne last week. For the week working with the team over there. And what I was keen to do when I was there is actually go out and chat with the local agents, go with the buyer's agents to understand some of the properties we're selecting and really get a bit of a vibe and a feel for the market in terms of what we're buying, what the assets look like. We do get a lot of Perth-based clients that we are sending to Melbourne. So it actually, from a relatability standpoint, it's always good to go over there and kind of compare what a suburb is in Perth so they can kind of get an understanding of what you're buying. So that element was good. But I think where I got a lot of the value from was speaking with the agents. So, probably spoke with 15, 20 agents last week in Melbourne. Areas we were looking predominantly, probably said this before, as a business, we're looking at more blue chip areas. So we're not really looking at the outer fringes or the outer suburbs. We were looking in the southeast quite a bit. So anywhere from Bayside, so, quite central to, suburbs like Elwood, we were looking at, whether we're starting to go more southeast all the way to Frankston. So Mentone, Carrum Downs, Frankston. And then we also did a fair bit in the inner north as well. So your Essendon, your Moonee Ponds, your Brunswicks, and then a little bit, I guess, in terms of the west. And what the overall feedback was from all the agents, and agents are very good at putting a sales pitch, but I think when you're in that environment, you tell them where you're coming from, and there's not a transaction at bay here. It's purely just to pick their brain. They do open up and. The overall feedback is market is definitely picking up in those areas. So in terms of, inquiries and days on market are improving massively. At the moment, though, it definitely feels like from predominantly the inner north and the inner southeast, majority of those transactions are home buys. So there's still not investors into the market in those areas at a significant rate that can justify a noticeable difference. What was the feedback is probably more down the southeast corridor along the coast, heading towards your Frankston, where you can start to pick up 550 square metre houses for around the 850 mark. There is a bit of investor activity getting there as well. So overall, feedback from those agents was there's been a noticeable uptick in the last 3 months. from a volume perspective. So, like I said, it might not show on the macro as Melbourne as a whole, because Melbourne is obviously now it's Melton's included into Melbourne. It's the biggest city in Australia. So it's going to be a while before we start seeing really aggressive growth as a whole. But in those micro markets we're looking at, they've seen a noticeable uptick in the last 3 months. However, a lot of it is still home buyers. So investors are still taking some time to get a bit of confidence into that market.
Which is exactly what you saw here in Perth.
Yeah, exactly.
Deja vu.
And do you know what? That is the exact, I think because we lived and breathed that market in Perth at the start, and then you're having conversations with people, and we're just like, this is exactly what it was like in Perth, where people are saying, this is unaffordable, this is, the price of it, but the value you can get is crazy. So with some of we're out of that trip, 3 houses we saw, we end up buying. So the buying conditions are much easier. Like if I'd gone to 10 properties in Perth, we would have been lucky to get one. So out of the 8 or 10 we went to, we bought 3, and some of them we after inspecting it, we realised there was some issues with the asset that we didn't like. But three out of the 10 that we saw, we bought. So the conditions are much easier to get into the market. But what was crazy to us is, and you always look at the data to make your decisions, but comparison does make sense, right? And we're looking at similar areas. So in Perth, so similar when I mean amenities wise, accessibility to the city, owner occupied appeal, good schools, da 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 da. Similar assets on a house are 250 to 300 more in some instances. So especially one of the assets we bought in Mentone, that would have been a similar asset in Perth, would have gone for at least 200 more. And on the unit as well, in areas like Elwood, which is very central, right near St Kilda, 5-10 minutes from the beach, trams into the CBD, a unit there we bought for 620, which would be at least 850, if not more, in Perth. So seeing what the market's done aggressively in Perth over the last 3 or 4 years, and looking at what the data is telling us, the reason why we're entering Melbourne, it's the same indicators that we're showing to Perth. So it's very much a bit of a deja vu. I think the challenge you're going to get with Melbourne, similar to what me and Ash were mentioning on the Perth call, it's going to take a while for Melbourne people to invest inside their backyard, because they've seen stagnation, or if anything, declining house prices in their area over the last 4 or 5 years. So for you to say, hey, Mr. and Mrs., I know your property's gone down 100, 200K in the last 5 years, I think now's a good time to invest in Melbourne. It'd be a very tough sell. So I think it'll take a couple of years before Melbourne people will get the confidence to invest in their market. But from an investor standpoint, with no emotion, there's really good buying conditions. One, like I said, you're not competing with as many owner occupiers as what you would be in Perth, or investors. In Perth, you're competing with owner occupiers and investors. In Melbourne, you're kind of just competing with owner occupiers. But you can take, this is the thing, right? You take the data aside, Melbourne's now the cheapest capital city in Australia, and it's the biggest capital city in Australia. And you're looking at the population growth, it's second behind Perth from a percentage growth. So a lot of the indicators, are showing us that just from a pure affordability standpoint, there aren't too many places in Australia where you can get a decent house on a big block, which accessibility into the city for under sort of $1 million, and you can get it for 850 in some of the instances we're buying. So data aside, purely from just a price point and affordability, it's got to go one way. But we've got to really be selective of where we're buying, because there are areas that are still not showing growth. There's too much stock in those areas. So we do really focus on, I think there's about 42 suburbs we're buying in Melbourne at the moment. And really just looking at the core fundamentals of owner occupier appeal versus some of the vacancy rates and long-term compounded growth rates as well.
I'm pretty sure you had less than 42 on your list before.
We've actually hired 2 more buyers agents for the business. So we're opening up. We're buying a lot in the southeast and some in the north. We've just opened up a new corridor in the north, because looking at the data, it makes sense. Melbourne is very much it's an international city, the north is very different from the south. The east is very different from the north. So there's different appeal. So the north for us is like, it's probably more of a younger, some of the areas we're buying, like your Brunswicks, your Fitzroys of the area, it's very hipstery. It's a young crowd, lots of pubs culture and whatnot. So from a yield position, it works out pretty well because there's a lot of young kids, young people wanting to rent in those areas. Whereas the southeast, you're probably looking at more of a family lifestyle and a bigger block. So just trying to diversify our options. But yes, the data we track, there were more suburbs on there. So I think from that trip, kind of came out of it feeling more confident with the market. And I think Melbourne is a challenge because look, there's no secret there is negative connotations with Melbourne, whether that's the crime, whether that's the migration for positive or negative. The taxes is the biggest one as well. I've just seen, they're coming out with legislation to make it mandatory 2 days working from home. That's going to be a killer for businesses as well. Which if you're trying to attract, trying to build up the economy and you're encouraging people to work from home, there could be a bit of a counterbalance there. So there are some negatives that are kind of pulling Melbourne down, but the core data from a supply and demand perspective, and then the affordability perspective, Melbourne does make a lot of sense. And you've only got to look at the only other international city that Australia has in Sydney, the most unaffordable market in the country. More people now from a migration perspective are going to, especially international, are going to Melbourne over Sydney because they can't afford the Sydney property prices.
Yeah, it was funny when you said hipster area. I was in Melbourne myself a couple of weeks ago, and I was driving. I always find it interesting when you travel because you never know what's a good suburb and what's a not good suburb. And one of the areas I was driving through, there was so much graffiti to the
Yeah.
point I didn't know whether this was a hipster area or if it was a really, really bad area. Like I couldn't work out, and I'm trying to work out like because it looks quite cool as well. But then I was like, no, there's a lot of empty buildings. I'm pretty sure this is the other side, but it could have gone either way.
Yeah, very much like I know you just recently went to London. Very much like London. Like you go to the south of London is very much like the southeast of Melbourne, and then the east of London is very much like the inner north of Melbourne. It's a lot of those international hubs where there's a lot of diversity there. A lot of people will stick to certain areas and almost create a sort of a sub or a microculture. So yeah, the more time, having spent 10 years in London, the more I go to Melbourne, it very much reminds me of London.
And also just the sky and the feeling of it, I would
The
imagine,
weather
is
as well,
the weather.
yeah. The weather definitely
Now,
plays a part.
Now we touched before, and I'll just we'll have a little bit of a chat about it because it was probably of value to BDMs that are listening that you and I would have the same market for finding investors. You looking for investors, we look for investors. So
Yep.
same but different. So we spoke about before how like in the past for Perth, we would very much be targeting the interstate investors, those referral partners. I would connect with
Yeah.
people in Melbourne all the time. And it's definitely something where if we're seeing more the local investors that we want to, hold on, if we see the local investors, we need to make sure we're paying attention to them. So if you were in Melbourne BDM, would there be benefit with them connecting with Perth people or their locals?
100%. I think a Melbourne BDM targeting a Melbourne-based client would be a challenge right now. Back to those reasons I said before, they probably haven't accrued the equity to go again because of the stagnation that we've seen in the last 4 or 5 years. Having said that, though, the vacancy rates are really low. So, and the rental increase is the highest I think it's been in sort of 15, 20 years. So there are some positives from a landlord perspective, but generally from a landlord, you're after capital growth and you probably haven't achieved that in your investment or your PPOR. So yeah, I think the next 12 to 24 months, a lot of the activity is going to be based from interstate investors. And I think the beauty of Melbourne is it's probably been the only market that hasn't gone on a run in the last 5 years. So you could open that up to anywhere. Like obviously, Ash, you and me are based in Perth, so a lot of Perth people would would be good target market because of the equity they've accrued. But then you're going to look at Adelaide and Brisbane, who started their run probably 12, 18 months before Perth. Very similar boat. Anyone in Adelaide and Brisbane would have a shed load of equity. And then, I mean, Sydney, the Sydney is probably, it could be the most crowded market to get into in some senses. However, it's like so just give an example from our business. We've got an office in Melbourne, we've got an office in Perth. Majority of our clients, 6% of our clients are Perth, 35%, sorry, not 30% are Sydney, and then the rest of the 10% is Melbourne, Brisbane, Adelaide. So actually our second biggest audience, our second biggest client base is from Sydney. And the thing about people from Sydney, because that market's been on a run for what feels like a lifetime, you've got mum and dad investors who have 4 or 5 properties and they're just everyday people, conservative incomes, decent incomes, but nothing crazy in terms of like maybe combined of 150, 250 grand. But they've got 4 or 5 properties. So because they've made money through the Sydney property market and they've accrued equity, they've then leveraged that to buy investment properties. So that's one. You've already got people that are sophisticated. But two, the biggest one is they're used to buying outside Sydney. They know maybe their PPOR or maybe their first investment they were able to get into Sydney. But then from an affordability standpoint, it was really hard to grow that portfolio in Sydney. So people in Sydney and the whole buyer's agent, from an Australian level is relatively new, but it originated from Sydney. So Sydney is like, 10, 15, 10 years ahead of Perth, for example, in terms of how long buyer's agents have been there. So you've got people in Sydney who have a shed load of equity, B, they've got multiple properties already, so they're used to diversifying, and then C, they're used to buying outside their backyard. So they're used to borderless investing. So actually, that we've naturally seen through our brand. We've got a podcast which naturally brings in leads. A lot of those do come from Sydney, and what we're finding is they are more educated investing outside their backyard, and they're very keen to grow a portfolio because they've had so much growth in their Sydney property.
And that sort of brings us into, like, I guess from a BDM level, how can we help find those clients? And I mentioned earlier that I think that I might send a real simple 3-question questionnaire to my clients to find out where they live, where they own properties, and I'll think of a third question, or ChatGPT will think of a third question for me, and then sending that out, because then if we can start really finding where our clients are living and where they have invested, we can start offering them more of that advisory level. We can connect with people, and I can connect with people in Sydney, I can connect with people in Melbourne. And the benefit of me, for example, connecting with a Sydney agent would be that we could potentially do a webinar together with the markets and the Sydney property manager. It's helping her him or her give value to their clients that live in Sydney about other markets, and therefore just providing that advisory level. But then it helps the person in Perth with providing that on the ground information, and then sort of develop that relationship. So that's just sort of one example of something that we can do together. If we know where people are buying from, how can we cross market, which I think that would be a very easy thing to do. And my last question for you is, like, and I liken it to, just the little I know of the American real estate game from Selling Sunsets, where it appears that buyers agents are just like, it's like everyone has a buyer's agent. Like, if I want to buy a property, of course I'm going to have someone that represents me and helps me. Do you think we'll ever get to that stage in Australia?
Yeah, 100%. And it's going to depend on what the market's doing as well. Obviously, I think the difference between America and Australia is, I believe they can represent both. They can represent as a buyer and a seller. Whether we go down that route, I don't think so. I think what people have seen probably in Perth in a very short time is, from a buyer's agent service, when Perth first started its run from 2020 to 2023, none of our clients were Perth based. They're all East Coast, because people in Perth thought why would I use a buyer's agent, because I can buy But what's happened is
I
because the
was one of
market.
those people too, but I've been converted.
So was I. So was I before I entered the space. And what people have probably seen through necessity is actually needing that buyer's agent to get into the market because they're not educated and it's competitive and they're outpriced. And we get asked this a lot, like, are you will when the market calls, is the business going to dry up in those areas? I think because we purely focus on investment, that's where we're probably getting more education out there at the moment. Is you know you can't just throw a dart at a dart. Like you can throw a dart at a dartboard in Perth right now, and anyone's going to make money. However, you want to be buying the right assets that go through multiple cycles. So where I see the value in a buyer's agent is more on the due diligence side of things. So in any market, the due diligence buying the right asset. Because like, look, when I was with the BAs in Melbourne last week, the amount of knowledge they have, not only from a local expertise, but from a property standpoint, your average punter is never going to get that. And it could cost you. Like it might not cost, like even in a soft market, you could buy a compromised asset that, in 3 months' time, you're spending 15, 20K on it, where you could have got the property maybe 5 grand more expensive that didn't have those issues. So I think from a due diligence and a due diligence perspective, there's always going to be a value for that buyer's agent. In hot markets, it's a necessity, really, just because it's really hard to get in. But I think the more people use them and the more it becomes prevalent in Australia, it might become the new norm where you essentially, and we've seen this with, because we've got some software that does something that might be doing something similar. I've had conversations with some other people in the tech space. There's people developing tech portals now that is going to cut out the biggest monopoly in Australia right now is domain and realestate.com. And I think the stats are like 75, 80% of the people that use it is buyers agents and real estate agents. So if there's a way where buyers agents can just get off market opportunities into a portal and deliver them straight to a client, it will almost eliminate the use of some of these portals. So that's where I could see it going, to say, is everyone going to use a buyer's agent? I think people might use a buyer's agent, but it won't necessarily cost them. It might be all reflective because it is expensive for a vendor to put their property onto those websites, and if there's some sort of portal that kind of cuts that all out, I wouldn't be surprised if we see something like that where buyers agents are working direct with clients, but it's purely from an off-market opportunity perspective.
Totally. I think the other thing that I think there's opportunity for reversing some of the roles is I know that, and I did it sort of in a peak time, but with the BDMs, like at the moment, we are focused on finding the client. Where in the past, when I've had time, I've actually gone and found a good property for them, and then
Yeah,
gone to my database and said, "Hey, I've just got this property. I've just looked through it. This is the walkthrough. This is the details. Here's all the information. Is there anyone that's looking?" And so delivering the property versus finding the investment property, not finding the client, because to be
correct.
honest, the investment property is harder to find than the client at the moment. So if you can
Yeah,
help them, you could reverse that way. And then I also think as well, like for BDMs, just to value the contacts that they've got, because I think that if I was going to put money on the two professions in real estate, it would absolutely be the buyer's agents, and it will be a property advisor. So more someone where I've got a client, clients that will call me and say, "Ash, I need this, I need that. Who do I use for that?" And you sort of can just help them with everything. I can help them with the buyer's agent. I can help them with, everything. So it's like I liken it to having, like, you've got one accountant, one
correct.
lawyer, for example, but you've got one real estate agent, and they can look after everything for you and put you in the right direction. And then so the contacts and the network that BDMs are having with a specific buyer's agent, finance, and all of that, the value of that.
Correct.
And to be honest, I don't want to dig on the sales agents, but they've got to be careful because we're the ones with all the people that they want with database, and the value is with us. And we are sort of, because we're so involved in a deeper level with that client, with their financials, what they're wanting. The sales agents on a very surface level, they haven't embedded that relationship. It's so short term. We've got the relationship, you and I, with like making you and I are the ones that say to that client, "Yes, you should buy it," or "No, you shouldn't," and they listen to
Yeah.
us. You know what I mean?
Absolutely. Absolutely. I think you hit the nail on the head. Having a right team around you is key.
Mm,
And you're exactly right. From a PM side of things and from a advisor slash buyer's agent side of things, we're dealing with these clients on the long term, and especially on the investor side because there's potentially multiple transactions.
mm.
Sorry, just my phone's just kind of. We have like long term relationships with these clients, so absolutely, I could see that being
Yeah.
the future.
So I feel like people should have that thought in their mind when they're, valuing their work and what they're doing, because I think that that's going to move pretty quickly in that space. Amazing. Well, it's been lovely to have a little bit of a different chat with you today, actually. So I've quite
Yeah,
enjoyed, talking a bit more on a BDM level. So I appreciate your time as always.
beauty.
And like we mentioned before, I think that we'll do because these seem to be coming around real quickly, and we want to make sure that we're getting more of a change and an impact with the information. I think we'll change the next one till June, because I reckon
Yeah,
then there'll be more to talk about from a data point of view and more of a drastic change for us to sort of notice and pay attention to, and maybe bring in a little bit of that element of marketing and how we can use the data for marketing,
yeah,
as well. I think would be really something that I'd be interested in as well.
absolutely. No, I love it. Appreciate
Okay.
your time and
All
being
right.
on
I
speaking
appreciate
in.
your time.
Yeah, thanks for having me.
I'll speak to you soon. I'll send you an email.
See ya. Bye
Okay.
bye.
Bye.